Ira Epstein with your agriculture wrap-up, and this is for Thursday, the 5th of March, 2020, and we're just after 5 p.m. Central Time. So we're getting a little bit of bounce as the stock market reopened. The gold market staying strong along with the silver, and foreign currency still gaining on the dollar. As we come in the grains, they're already closed, but I can get you to the prices because they're very important. In the beans for the week, on a closing basis so far, remember we have one more day left, we're up 5.5 cents. The market is staying very firm right here into the basically 889 level with resistance, as I see it, at the 18-day average of closing prices at 904.25. Now, I like to put just closing prices every now and then to eliminate the noise of the market with the wild swings that you get, and this is what you call those wild swings. As you can see, the market had what we call today an outside day down. It made the highest high of the move and then went into a state of collapse, closing about 10 cents lower. If we look at the swing line, and this is a chart without the swing line, this is the swing line, we have a pattern of a low that took out a prior low and a rally high that's gone up more. The reason I have the line drawing down is when you have an outside day down, you shouldn't take that day's high out. My theory is on this, doesn't mean it can't do it, for at least 2 trading sessions. So if you did, it would be a sign to me that this is a more important zone of support than I'm giving it credit for. If it falls back, now we find out what this area is made out of. When I put moving averages on the chart, I tell you that this is the line in the sand. And the reason it is from that 18-day averages, so often the market tries to figure what it's going to do next. So even though you reached up and over it, you've fallen right back into it. And if we look at the Bollinger top, and I've been saying this to you for a long time, when you get this sideways type action in there, the first challenge to the upside, or whenever you're challenging it on the downside, look for the pros to be taking money off the table. If you're up to that number, the bias is up. Doesn't mean the trend is up, but I think they're coming out there. If you get down to the lower number, somebody was short. I'm looking for them to be covering down there. What is the position going home? Neutral as can be. You have the bias down, you're caught in these bands, not going anywhere. You had gotten overbought and you're turning back. If you break from here, I know I'm a broken record, but I'll say it again, 885.75 should be an area that the market tries to find some support, about 12 cents lower. In the meal market, you had gotten up and over the Bollinger Band one day, 2 days. This day we were, just over it 2, 4 days in a row over it. Then the market, it's rare you get to a 5th. You can do it. Bonds and notes just did it. But it's really rare. I mean, don't play for that to be the norm. Go do your counts. You'll see what I'm getting at. So you started a correction. The 100-day average, because you're over that key average, could be the next support level. The market today finished 303.90, just under that. So if you give further ground here in an overbought market, where could you go? To the 18-day average. If you bounce tomorrow, I'd look for the resistance between 305.20 and the upper Bollinger Band. Are we trending? No, we had what's called a vertical price rise. You went from an extreme low, rallied dramatically, and suddenly you're getting a pullback in that market. The market that I've been looking for a failure on is the May soy oil. You had lost the embedded reading. This is an embedded reading. It's when both numbers that make up the slow stochastic are going sideways under the number 20 for several days in a row or longer, which you did. When you lose that reading, just the way you did right here, it often means price. You've lost the reading unless you regain it immediately the next day. Cattle, by the way, a good example of this. If you don't get it back, I'm looking for price to make a run at the closest key moving average, in this case, the 18. And that's what it did, and that's where it should run into its first resistance. The market is working itself out of an oversold condition in a downtrend. When we come to the corn market, you had one of these bump ups where you ended the downtrend. Up to this point, you'd had a pretty clear pattern of lower highs, lower lows. Again, you were getting extreme under the lower Bollinger Band. Momentum turned without embedding. That, if you get through this high, means you've ended the downtrend, which it did, and you run into your first resistance at the line in the sand. You tried to extend, but you still hit that number, and you're pulling back to it. So this is a market looking for its new direction. Is it going to be a resumption of creating a downtrend again, or what's it going to do right here? It hasn't decided. The wheat continues in a downtrend. Now, if we look at the momentum studies here, both numbers are under 20 tonight. Yesterday, both were under 20, not the day before. So you're not in an embedded reading. You're oversold. Support on the first challenge of the Bollinger Band wouldn't surprise me. But there's something else that got very bearish on this chart. Yet a crossover where the 18-day average of closes for the first time got back under the 100. So it's been a while since that's occurred. But I think the chart technicians will pay heed to that, and that becomes a new resistance point. Now, if tomorrow you're down, you get the embedded reading, and it's sort of baking in even more bearishness. In the sugar market, is the market going to be able to find support between the 100-day average, which you hit for the first time yesterday, in the lower Bollinger Band? You're oversold. I don't know if it'll embed or not. This all fits in with the seasonal that I had been prepping you for when we were back in February, about mid-February, so I'm not surprised at the break the market's had. Now in the coffee market, use your head. We saw the coffee come up and flip itself around in the depths of the Chinese COVID-19. Market got up, did a nice run. What countries are now starting to lock down, and how will that affect coffee price? Something you got to ask yourself. Italy's locking itself down. Museums are closed. Cinemas are closing. Streets are empty in northern Italy. In the U.S., are we going to have the same issue? We have seen it in Korea and other areas. So your consumption in those stores falls a little. So we're getting a pullback. Momentum-wise, you're dropping back. The trend is up. Battleground, I think, is between the 18-day average and the 100. And this has been my canary that I've used. I told you about it as it was acting better, and I decided to make it there. I'm wondering if it tells us about the other parts. Now, yesterday was one of these days where I got snookered. Here is a market in the cattle that's got an embedded reading. It loses it on the close of business yesterday, and today it regains it with a rather dramatic drop. So that's one of those times where the market gave a false signal that it was ready to bump. It's not. It could be headed back to this lower Bollinger Band. To break the downtrend, you've got to get back over this 112.65. This is the April cattle. Very shortly, I'll be moving to the June. Now, in the April lean hogs, you've got to bump to the upside. This market turned bullish today, but it's right against that 18-day average. You developed with today's rally. You didn't have this prior to it. You had lower highs, lower lows. But if you got over, and I think I said this yesterday, 64, 82.5, watch out, especially if you can keep a close over the 18-day average, which you did. If the market can run here, the next resistance, 67.52, the number the bulls don't want to see taken out, in my opinion, is the lows of yesterday, which is the, 63.30 level. So that's what I'm looking at in a hard way. So you put it together, you try to come together with game plans, but I'll tell you what's the scary part. Everybody's nervous about the stock market. Is it going to suck money out of the economy? What's going on? I put together a special report on stock indices and the ETFs of the QQQ, the DIA, the SPY, IWM, the Russell, and all those. If you'd like to see the report, go to our website, www.iraepstein.com. Go to research, you'll see the special report. I'm Ira. You have a good day.